Bitcoin will be worth more in the future. Here is proof. You've heard it a million times. Bitcoin will be worth more someday, but this isn't just a feeling or a motivational quote. The proof is right in front of us if you know where to look. Let's break it down together. The first big reason Bitcoin keeps becoming more valuable is institutional demand. Back in January 2024, the SEC approved 11 spot Bitcoin ETFs. That one decision completely changed the game. An ETF is an exchange-traded fund. Think of it like a stock that lets you buy Bitcoin exposure without touching crypto wallets or exchanges yourself. Since those approvals, over $100 billion has flowed into these ETFs. That's money from hedge funds, retirement accounts, even endowments. When BlackRock's IBIT alone owns almost 3.6% of all Bitcoin ever mined, you start to see just how much traditional finance is now plugged into this space. This is why analysts say Bitcoin is starting to behave like digital gold. It's not a side bet anymore. It's a serious asset class that portfolio managers are adding to balance sheets. When that many professional investors are holding Bitcoin, they aren't thinking about a quick flip. They're thinking 5, 10, even 20 years ahead. Every time money gets locked into these ETFs, it removes supply from circulation and makes the remaining coins more scarce. Scarcity is powerful. Remember, there will only ever be 21 million Bitcoins. You can't print more. That fixed supply is a big reason why price pressure builds when demand grows. Another key driver is global adoption. We are watching countries, corporations, and banks move from ignoring Bitcoin to integrating it. El Salvador started buying it for their national reserves years ago. Now we're seeing more family offices and corporations treat it as a treasury asset. This is similar to what happened when companies started buying gold decades ago. The price didn't just jump once. It built a long, sustained uptrend. Macro trends are pushing people toward Bitcoin too. Inflation, money printing, and currency devaluation have been hitting economies worldwide. When people lose faith in their local currency, they look for a store of value. Bitcoin becomes an easy choice because it's borderless, always available, and not controlled by any one government. As more people wake up to that, more money flows in, and price reflects that demand. Even big investors who used to trash Bitcoin are changing their tune. We've seen hedge fund managers who called it a scam years ago now openly admit they were wrong and are buying for their funds. That tells you something. The narrative has shifted from "this is risky" to "this is a hedge we can't ignore." And let's not forget the halving cycle. Every 4 years, the reward for mining Bitcoin gets cut in half. This happened again in April 2024, reducing the number of new Bitcoins coming into the market each day. That creates supply shock. Fewer new coins being sold by miners, but demand keeps growing. Historically, the 12 to 18 months after a halving have been some of Bitcoin's strongest bull runs. This is why so many price predictions are boldly bullish. Hedge funds and analysts aren't shy anymore about saying Bitcoin could double its market cap to $5 trillion in just a few years. That means roughly doubling in price from today. ARK Invest projects $300,000 as a realistic case by 2030, with a bull case of over $1.5 million per coin. They back this up by modeling adoption curves, basically tracking how quickly new investors join the network. And if that sounds wild, think about this. Bitcoin is still tiny compared to global assets. There's over $600 trillion locked in bonds, stocks, and real estate worldwide. If Bitcoin captures even 1 or 2% of that, we're talking prices that would make today look cheap. That is why so many institutions are rushing in now. This is just the start of the story. In the next part, we'll dig deeper into what major banks, hedge funds, and macro investors are projecting, and why their timelines matter for you if you want to catch this wave instead of watching it pass by. And that's just the beginning. The biggest names on Wall Street aren't just watching from the sidelines anymore. They're making bold calls on where Bitcoin is headed. Philippe La, founder of Coatue Management, believes Bitcoin's market value could double to $5 trillion within 5 years. That's not a random prediction. He's comparing Bitcoin to the $600 trillion sitting in global assets like stocks, bonds, and real estate. If Bitcoin captures even a small slice of that wealth, those numbers stop sounding crazy. ARK Invest is going even bigger. Their base case prediction is about $710,000 per Bitcoin by 2030. And their updated bull case is $2.4 million per coin. That's based on a model that accounts for how many coins are actually in circulation and tradable, not lost forever in old wallets. When you realize that a large portion of Bitcoin's supply is effectively gone forever, it makes sense that the price of the remaining liquid supply would need to go higher as adoption accelerates. Finder surveyed 24 crypto and fintech experts this year, and their average forecast puts Bitcoin above $180,000 within the next couple of years, crossing $450,000 by 2030, and eventually breaking $1 million by 2035. These aren't random influencers tweeting price calls. These are researchers, fund managers, and economists running real adoption models and making educated projections. And we're already seeing it play out in real time. Since the SEC approved spot Bitcoin ETFs back in January 2024, over $100 billion has poured in. BlackRock's IBIT alone has picked up nearly 750,000 Bitcoins. That's almost 4% of all Bitcoin in existence. And they're not planning to sell anytime soon. These are institutional investors with long-term horizons, locking up supply and creating constant upward pressure on price. We also just came through the April 2024 halving, and history is repeating itself. Each cycle, the 12 to 18 months after a halving, have been the most explosive for Bitcoin's price. Right now, we're 5 months into that post-halving window. And this is where historically the biggest moves begin. Daily supply of new Bitcoin has been cut in half. Demand from ETFs and institutions keeps growing, and that combination usually drives the strongest part of the bull market. Even the macro investors, the ones who watch global currencies and central bank policy, are calling Bitcoin a hedge. A hedge is just protection, a way to offset risk when inflation runs hot, debt spirals higher, or local currencies lose purchasing power. Bitcoin's hard cap of 21 million coins and its predictable issuance schedule make it one of the few assets in the world you can trust not to change the rules on you. That is why more of the smartest money in the world is positioning now, not later. If you've been telling yourself you're waiting for the perfect entry, this is your moment. You're not early, but you're definitely not late. You still have time to position before the next wave of adoption drives prices higher. And this is exactly why I created ZenBlock. I don't want you stuck guessing which headline to follow or panicking every time the market dips. I want you trading with a plan, with risk management, and with strategies that help you grow wealth in every phase of the cycle, not just when everything is going up. When you book a free strategy call with my team, you'll sit down one-on-one with a coach who will ask about where you are right now, whether you're just getting started or already investing but want to scale, and they'll give you a clear path forward. You'll see exactly how our system works, what kind of results are possible, and whether ZenBlock is a fit for you. If it is, you'll get the full setup, step-by-step guidance, our proven trading system, and support so you're never left wondering what to do next. If you've been feeling like the clock is ticking and you can't stay where you are, this is the time to act. Stop waiting for the perfect moment. The perfect moment is the one you decide to take control. Book your free strategy call now, and let's build your plan together before this next leg of the bull run plays out.